Okay, so when it comes to whole life insurance or high cash value life insurance, a question has come up many times just in the years that I've been in business, and it's more relevant right now with everything going on. We are shooting this video March 27th, 2020. So if there is a stock market crash, or if there's an economic downturn, a recession, will that impact my life insurance policy, the cash value within my policy? Can things crash? How will a market crash or a recession impact my values? Really, can I lose money? That's the thing. That's the question that always comes up. Or will it impact the policy performance over time? Very well could. So again, if we have a stock market crash or a recession, how is that going to change things? And a big question that comes up is, will insurance companies survive or be impacted by economic downturns or big stock market events? You know, you've heard us mention, or you've heard me mention several times, the big four, the four major mutual companies. And there are other insurance companies that have been around for a long time as well, 160 years plus with the top four. Point to it, when you look at those companies, if they've been around for 160 years and have always paid a dividend, that means they've survived events such as the 2008 financial crisis, the Spanish flu, the Great Depression. We're going to see some examples, actually. We've got a nice chart we're going to look at and see how insurance companies have weathered those storms. The big thing, when we take a cash value life insurance policy, we have a contractual guarantee of 4%. Now, the policy design is critical here to make sure we're actually getting money in cash value that's accessible and lessens our burden in the event life happens. But then also the insurance company's strength, and then we've got historical here, historical track record. How have they sustained through events in the past? And my big thing is, the insurance company may have done well, but how did the policyholders, if you have a policy, how did your policy perform? And that's why I'm so big on actual performance. Taking a cash value life insurance policy, not just projections, not just illustrations, who has the strongest guarantees, not just the gross 4% rate, but the strongest actual cash values and the guarantees, and who has consistently delivered strong cash values. That's why I always talk about the big four. So what we're going to look at here is a neat chart that dates back, this guy, to 1900, and go back further with some of these companies. But in green shows a specific insurance company's trend and how they have weathered storms, or as the market produced X or the economy performed at a great level, whether it was doing very well or very poorly, how did the insurance company weather the storm? How did they perform? And this is good to be aware of. We might not want to go into all the detail if we're not interested in it, but it's good to be aware of just to provide some assurance that your money within a cash value life insurance policy will be safe. You've got guarantees as well. So green is the insurance company. So gray is the market. This is the S&P 500 composite index. As time passes, so early on, really after the Great Depression, there we see the company's performance tank. Now, at the same time, they continued to pay dividends through this time. They were obviously just much lower. However, things did adjust from that point forward. The market came back. But what's so interesting about this, on years or time periods where we see tanks, so the Korean War, market dips, what happens with the insurance company performance? Flatlines. Kind of like an index chart where it continues to go up. Market goes up, economy improves, insurance company improves with it, things go down, principal is protected. Now, a couple other things here. You see the booms, Black Monday, tech boom, financial crisis. big dip there, yet insurance company keeps moving forward. I remember when I first got in the insurance industry, it was 2011, 2012, recently out of college, and talking to people that have been in the industry, have had whole life policies, and they were wealth managers that had life insurance as an asset as well. And their comment was, man, I love my whole life policy. When everything else tanked, I kept on getting that 6%, 7% dividend on my whole life insurance policy. And I saw my cash values continue to go up. It was a safe, fixed asset to them. Now, the one thing I'll add, so this does show just an insurance company's trend over time, and they are prepared to weather financial crises, market crashes, economic downturns, all that good stuff. But the one thing I'll add is when it comes to their dividend performance, here's the thing. Their dividends are tied to what? The insurance company, it's their surplus, what their performance looks like. Insurance companies buy assets in bulk, and it's got to be safe. They will not go into the market, or they'll have a very small percentage of their funds in the market. So if interest rates in the economy decline, which they have been, and they just did, they took a huge slash within the past month, that will make things more difficult for insurance companies to boost their dividend rates over time. We have the guaranteed floor of 4%, but when we look at insurance institutions and companies, I'm not expecting, and I've talked to insurance companies on this before the interest rate slash, that they were expecting for at least 10 years that dividends are not going to be skyrocketing. Because the interest rate environment, they're expecting that to remain low for 10 years, dividends will likely follow the same trend. Point being, when we're looking at a life insurance policy, we do want to make sure we've got a strong A-rated company. There's the big four, there are others as well, but make sure we are looking just to set expectations properly, a properly designed policy. Look at whatever the agent's proposing and then ask for a minimum premium, 10% or less. That will give you more cash value, especially the guarantees. But then on that point, look at the guaranteed cash values, midpoint assumptions, and also the total dividend rate. That'll give you a good sense of what that policy will look like from a performance standpoint, when it will break even, how much of your cash is accessible from the get-go and over the life of the policy, and it will prevent any chance of buyer's remorse. This way you don't buy a policy today and find out it could have been way better if you would have known just a couple tweaks or questions to ask to improve that cash value. Hope this helps. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.